Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Time now to get the lowdown on ETFs in relation to the current government shutdown with our ETF strategist Eric Dutram, who joins me here from Zacks.com. So as we sit and record this, we are in day number 2 of the government shutdown, right?
Exactly.
And you've been monitoring the situation, I can tell.
Yeah, very closely. Well, not that closely. It seems like they're pretty much at odds over a number of issues. Some people think this might drag on for a couple of weeks here. So, some investors might be getting a little worried about the situation, at least based on, some of the main issues with the budget and how this might impact debt ceiling talks down the line.
Okay. And so what do you got for us here?
Well, I think people shouldn't be that worried, at least in terms of the budget battle. In the last, basically a little over a dozen shutdowns, market is down about 2.5%. And these are only shutdowns that lasted more than 10 days, so all the big ones. So not really that much of a concern. And if we look to the latest shutdown, which was 94, 95, the market was pretty much flat. I think the S&P 500 lost about 1 point. So, it's really debatable how much of an impact a prolonged government shutdown is really going to have on investors.
So what's the connection between the ETF space specifically and the shutdown?
Well, the broad market might be doing okay in a government shutdown, but there's actually a couple products that investors should really keep an eye on here over the next couple weeks, because these could be big movers depending on what happens in these negotiations.
Okay, and you're going to give us some examples of some products that could be impacted.
Exactly. The first I have is VXX. This is a volatility ETN, and this product tracks what's called the fear index. At least that's what traders refer to it as.
Right.
And generally goes up when volatility is surging, and it declines when volatility is decreasing in the market. And so if we saw some big gains in this product when the shutdown became imminent, and then when investors first thought, this isn't going to be that big of a deal, product declined about 3%, which was yesterday on October 1st. But once again, today on October 2nd, we're seeing this product surge up again as investors are starting to realize, hey, this might last for a little longer. A lot of traders don't really like uncertainty, and so this is a way to kind of bet on uncertainty.
Okay. Volatility that in the early going anyway.
Exactly.
The day hasn't closed just yet as we're sitting here. All right, you've got another one related to medical devices?
That's right. This could be very impacted by the ongoing talks because there was a 2.3% excise tax that was put in through the Affordable Care Act, or Obamacare as people like to refer to it as. Republicans are trying to repeal this as part of the budget negotiations, and some Democrats actually seem to be on board, at least in the House. Specifically if they're in states like Minnesota that have a lot of medical device companies. So obviously if they can get this tax repealed, it should be pretty good news for IHI. The product is up significantly so far this year, but it does have a very weak Zacks ETF rank right now. So, it's a little dicey situation no matter what.
Does the rank reflect what's going on with the budget talks or not necessarily?
Not necessarily the budget talks, just more of an outlook and the regression information. You can read more about the Zacks ETF rank on our homepage.
ETF section of the website. And a third one in what, home building?
That's right, XHB. It's a spider home builder product. It just doesn't focus on home builders. It has a lot of companies like Bed Bath & Beyond and the like that do products that go into the home. And this one could be hurt because both the IRS and the FHA are kind of running skeleton crews at this time. So loan processing, those kind of items might take a little longer.
Right.
And consumer confidence could also decline, if this, is a really prolonged shutdown. So this one could be hurt, based on what happens over the next couple weeks here. However, if we do see government bond yields, really decline thanks to some, safe haven buying, this could actually act as a boost for this product, because it would, drive some more sales in the mortgage market, assuming, people can get those loans. Okay. So this is definitely another one to watch, at least over the next couple of weeks, depending on what happens.
All right. Own any of those three?
I do not.
All right. You can check out other ETF articles in the ETF section of our website, Zacks.com, if you're not there already, as Eric so eloquently directed you a short time ago. And all you need to do is get over to the homepage. You can link to it right off the homepage if you're watching this video out in syndication land. With Eric, I'm Terry Ruffalo.